Today on the Tearsheet Podcast.
We have now taken the Dosh SDK that we created and deliver that directly to these financial institutions and neobanks so they can deliver a rich cashback experience to their millions of consumers that they have, whether it be utilizing a digital method for payment or credit card or debit card that financial institution and neobank has.
Welcome to the Tearsheet Podcast. I'm Tearsheet's editor-in-chief, Zack Miller. As challenger banks expand their capabilities, many with debit and credit cards are adding in rewards as a way to service their customers. Fintech firm Dosh gives millions of users cash back when they shop at top retailers that use the app and cash back as a customer acquisition tool. Dosh recently announced a major expansion of its Powered by Dosh service, with Venmo and Jelly as its first official partners. Now with Dosh, any financial service company can provide automatic, instant, card-linked cashback experiences for its users. The fintech firm has just partnered with Betterment. With Dosh's cashback experience fully integrated into the Betterment debit card, Betterment can offer checking users a seamless rewards program with great offers from thousands of merchants. Powered by Dosh will provide Betterment checking customers with the ability to browse available deals where they'll frictionlessly earn cash back. Dosh CEO Ryan Wuerch joins me on the podcast to talk about the deal with Betterment and Dosh's positioning as an embedded finance tool.
Ryan Wuerch, I'm the CEO and founder of Dosh. And Dosh, we have created one of the fastest growing cashback apps and platform, delivering automatic, frictionless cashback to millions of consumers and over 100,000 merchants and brands throughout the United States. Whether it be through our Dosh app or through the Dosh SDK, that's providing the cashback experience for financial institutions and neobanks like Venmo, Jelly, and news we're announcing today, Betterment. We're focused on providing today the richest cashback user experience for consumers and the highest return on ad spend through increased AOV, frequency, customer acquisition for merchants through our transaction-based advertising platform.
Fantastic. So before we jump into the news and sort of the expansion of sort of the SDK and the platform aspect of Dosh, last time we spoke, it was August of 2019. Wow, time goes really quickly. Can you catch us up on maybe, whatever you're free to share in terms of metrics or how the company has grown since then, what you've done since then?
Absolutely. So since that time, a lot has taken place. Up to really the end of 2019, the primary place that you would have seen Dosh is through the Dosh app. Millions of consumers that have downloaded, registered, put in their bank information, credit card, debit cards into the Dosh app. This free app where whenever they go and live their life, without having to click and activate an offer or scan a receipt, all automatically when they go and shop and pay with the credit card that was entered into Dosh, Dosh automatically would provide frictionless cashback directly into their wallet. It was the end of 2019, PayPal being a significant investor in our company. Venmo launched the entire Dosh platform to their millions of users that have the Venmo debit card. What that led to is us delivering the most robust, the richest cashback experience ultimately in the financial institutions, financial services, neobank industry, to where now Venmo users have access to the thousands of Dosh merchants when they're using their Venmo debit card, just like the Dosh app. Inside the Venmo app, they're getting automatic cashback. What that led to is a tremendous number of financial institutions and neobanks wanting to have access to that very same platform. And since that time, we have now taken the Dosh SDK that we created and deliver that directly to these financial institutions and neobanks so they can deliver a rich cashback experience to their millions of consumers that they have, whether it be utilizing a digital method for payment or credit card or debit card that financial institution and neobank has.
That's really wild. And so Betterment, you're announcing this news that Betterment has launched Powered by Dosh. Can you talk a little bit about that partnership?
Absolutely. Well, Betterment, tremendous, what I call a true challenger bank today, where they now will be utilizing, it'll be launched here in the coming months to all of their consumers when they use the Betterment debit card. That debit card will now have access, all in a frictionless manner, to the thousands of merchants, whether it be Walmart or Burger King, just as an example of some of the merchants that when that Betterment consumer uses their debit card, that cash back will automatically be delivered to them without them having to do anything, anywhere from 2 or 3% up to 10+% cash back on that purchase or transaction.
Amazing. And we've been covering Betterment's transformation into banking services with its roots in investing originally. They may not call themselves a challenger bank, but I agree with you. They're definitely competitive, and they're going after the daily spend, for millions of consumers in the US. I'm curious from Dosh's perspective, like going the platform business, it's different than just marketing your own app. Like how is the organization changing? Is marketing changing, or channels changing in terms of how you grow sort of this partnership business, versus sort of just marketing the app straight up?
We really believe today we have one of the strongest competitive advantages in the market because of our roots being the Dosh consumer app. The Dosh consumer app every day is having to deliver the right offer to the right person at the right time in a frictionless way. We have to every day, our experimentation platform that's every day trying to create a better user experience, more cash back being delivered to consumers, and more importantly, because who is providing that cash back is actually merchants and brands that are engaging directly into the platform, the transaction-based advertising platform, where those merchants are seeing one of the very best ways for them to deliver what they're looking for is obviously new customer acquisition, consumers being more engaged with their brand through higher frequency, spending more with their brand, creating higher average order value or higher gross merchandise value. Those two things coming together. And so our roots inside of Dosh is all about the consumer. Now, taking that, knowing that that financial institutions, financial services company, and neobanks isn't historically coming from that perspective. We take all that we do in the consumer and deliver it directly into the experience of a neobank like a Betterment, as an example, or financial services company. And without them having to have the marketing, without them having to have the significant number of engineers and data science and all the things that goes today inside of Dosh, they're getting all of the benefit for that. So what I like to say is everything that we do every day, we have now created the technology stack that flows directly through those financial services company and neobanks, so they don't have to do it themselves. So if anything, what we have done, we've actually emboldened, we've strengthened data science, we've strengthened engineering, we've strengthened product to let that flow to the benefit of each of the partners that we're working with, so they can, just like we every day, focus on having the best experience for our consumers, our subscribers, is that they have that very same thing happening for them, to where what they're looking for is they want to be top of wallet, they want to be top of mind, they want to create better engagement, better utilization of their products and services, delivering directly to their consumers.
I got that. And so do you have new people in charge of integration, new people in charge of partnerships? I'm curious to know how organizationally Dosh has evolved.
No, absolutely. So yes, we have it's called Powered By directly in our company. So we have strategic partnerships team, the merchant integration teams that we have. Today that onboards merchants now is very different than the team that is engineers that are integrating these. We have a number of these coming on almost on a weekly basis now. So we have a merchant, or we have a Powered By integration team both on product as well as inside, to make those very rapid and seamless for those Powered by partners.
That makes sense. And I want to go back to something you said, Ryan. I liked what you said. It was, we're seeing Tearsheet's coverage, you're seeing convergence. So you have all these fintech companies, little by little inching into banking services. They may have started as an online lender or an investment platform. They're all rolling out banking services. This has been one of the major themes this past year. And obviously one way to differentiate yourself and for the card to be top of wallet is through a rewards program like Dosh offers, Powered By. Can you talk about, I guess, how important rewards are in the market right now, and how companies like Betterment are thinking about differentiating themselves vis-a-vis rewards?
Well, again, it's a highly competitive environment today. What we saw, a decade ago, it was primarily, 4 or 5 large financial institutions that were competing against each other. Today, whether it be, Apple or Venmo or PayPal or Betterment, we have now seen that, where those 4 or 5 large FIs now is being distributed amongst so many different players in the marketplace today. So everyone have obviously a demographic focus. Some will have an investment focus. Everyone will have their niche or what they're trying to focus their brand on for their consumers. But across all of it, what we're seeing more than ever before today is consumers want to know whatever that they are using, whoever they're committed to with their banking relationship, is providing them the most value. And what we're seeing now across the entire market is one of the greatest ways for these brands to be able to differentiate themselves from another is how much I'm able to get you back for using my instrument versus using another. And when Apple came out with the Apple Card, one of the biggest ways they were trying to highlight not only a great UX, but it was how much cash back you got. And we're almost saying that is table stakes today. Historically, where it's come from, though, it's been based on interchange. And so predominantly those financial institutions were actually funding that cash back themselves. So it was at 1% or 2%. In some cases, you'd see 3% being funded from interchange. That's just not enough today. And so today, what financial institutions, neobanks are doing is one, trying to create the most frictionless experience to provide the most amount of benefit for the consumer. At the same time, doing in such a way from a user experience perspective that makes it compelling and lets them see it right in front of them. Now, what we've seen in particular right now, given the climate of COVID-19, I believe it's accelerated this more than ever before. I mean, today, consumers expect their credit and debit cards to come with rewards. And especially because of the pandemic and COVID-19, the environment that we're in, just economically what it created. Today, consumers are wanting as much value as possible to be provided to them when they're actually going and shopping, spending the very money that they have. And so there's today, in a lot of the behavioral research that we do and neural studies, is there's negative connotation that actually takes place in the mind when somebody actually uses an instrument. And no matter what instrument that is, credit card or debit card or digital instrument, because something is leaving us. What we found in our research is that if you can line up instantaneously when that swipe of the card, exit of funds goes out, can you line up at the same time a positive, delightful moment that actually trips the neurons to actually feel, well, that was actually a positive experience. Well, what that positive experience gets galvanized to is, one, the merchant or brand that is in fact that's actually providing it. 2, the instrument in which I'm using. And if you can line up that, what happens is it creates more loyalty for that bank or for that institution that is actually providing that card and making it top of wallet.
Got it. Just going back to something you mentioned about funding rewards programs. Who funds in this case? Is it the merchant purely?
It's the merchant. Yes.
Uh-huh.
So no different than, this is the evolution we've seen, and frankly, in the advertising industry. And I personally believe, and obviously a lot of what we built our company on, is that what we saw as traditional advertising between 1950 and 2000, that's all CMOs had. was radio, television, print. Early 2000, it turned into digital advertising. There was that new word, internet advertising, where CMOs would give the $50,000, $100,000, $200,000 test budgets to see if this thing worked. It wasn't until 2005 that it became 1 or 2 or 3% of overall ad budget. It took 19 years. Last year was the first year ever that digital advertising, meaning Google, Facebook, et cetera, was larger than that of traditional. Last year, approximately $238 billion was spent in advertising, and over half of that was spent in digital advertising. The transition now is to what's called transaction-based advertising, where merchants and brands want to know that the dollar that they're spending is actually delivering a result. Today in traditional digital advertising, less than 50% of it has attribution, meaning, how many times did you really buy something because you saw it on a billboard? And even if you saw it on a billboard, there was no way to prove that billboard actually drove you there. Mm-hmm. What transaction-based advertising does, and really it's the financial institutions, it's your neobanks, it's your financial services companies, it's your large FIs, because it's at the transaction, when that swipe happens, if you can actually tie that swipe, that ultimate transaction directly to what the merchant was actually paying for in their advertising dollars, you actually create pure attribution. And so in this case here, it's the merchants that are actually moving their advertising budgets that had historically gone to Google or Facebook. And now they're saying, listen, we can move it through this engine directly to consumers. And who wins in that is the consumer themselves, and obviously at the same time, the merchant. But in this conversation, it's also the financial institution is winning because they're getting higher engagement, higher loyalty with their own user.
It makes a lot of sense. And how does Dosh make money? Is there a spread there?
Yes, how Dosh makes money is we are paid a marketing fee, a percentage on all GMV, so gross merchandise volume. So we're paid a fee. A portion of that fee is going to the consumer in cashback, and a portion of that fee is coming to Dosh. And our systems actually, based on the result that's being derived, ultimately positions how much of each is going to a consumer.
That's really cool. And in the Powered By relationships, how are those deals structured?
In our Powered By relationships, it is all of our technology. It's our entire platform. It's merchants that are engaged directly with Dosh. Our technology is then being adopted by the financial institution, in case Betterment or Venmo, et cetera. And most typically, how that works is the same marketing fee is being paid. A portion of that will be going to the consumer in cashback. The largest portion goes to the consumer in cashback, and that's where we're driving the behavioral results for our merchants. Portion of it's coming to Dosh, and a portion of it goes to our financial institution, neobank, or financial services partners.
That makes a ton of sense. And I guess one question that arose as you're talking about, I'm just picturing, neobank after neobank coming to Dosh and rolling out Powered by Dosh. Like at a certain point, that becomes table stakes. Are they pushing for exclusive relationships in their industries at all?
No, we right now, because our technology allows for a tremendous amount of customization. It's all about the user and delivering the right offer to the right user. And so one bank will see something different than another bank, or consumer will see something different. The key thing for us is it's about the content at the right time in the right place to the user. That's ultimately what we focus on. And we do that for our, for a Betterment as an example. Our objective is to know that consumer and be able to deliver for that consumer the highest degree of value as possible when they're using the Betterment instrument.
Got it. I have one last question. Do you have internal goals of how many Powered By relationships you'd like to launch by the end of next year?
Well, I'll put it more in perspective. We are targeting approximately 200 million consumers through our Powered By relationships by the end of 2021.
Ryan, it was great catching up with you. Thanks for joining us on the Tearsheet Podcast today.
Thank you, Zach. Good to be here.